What's up, everybody? Today, we're going to be taking a look at Eli Lilly, ticker symbol LLY. I know this is a company many investors are interested in. We recently looked at their main competitor, Novo Nordisk. We're going to see how Eli Lilly compares. We're going to dive into their most recent results, take a look at what the future looks like for this company, and we're going to see what we can expect for a return on our investment if we invest in Eli Lilly stock today. As always, nothing here is a recommendation to buy or sell any stock. I'm just giving you my opinion, and I'll tell you what I'm doing with my money here. If you get value out of the video, subscribe to the channel. We just passed 3,000 subscribers here, so thank you so much to everyone who has followed. If you want to grab my Google Sheets, I will be starting a Patreon soon where I will have all my sheets up there. Hopefully, I'll have that up in just 2 or 3 weeks, so if you're following the channel, I will definitely announce on here when that's ready. Now, let's jump into Eli Lilly. Eli Lilly is a massive pharmaceutical company. They have drugs for cancer, for psoriasis, for insulin, but the reason the stock has really been on a tear the past few years has been because of GLP-1s. I'm sure you all know the name Ozempic. Eli Lilly's drugs are Mounjaro and Zepbound, and they're targeting diabetes and obesity. Right now, these drugs are making up more than half of Eli Lilly's revenue. If we just look at our little chart here and see Eli Lilly's revenue over time, you see they were mostly flat for almost 15 years. From 2008 to 2022, the revenue went from $20 billion to $28 billion, which once you account for inflation over that period, this is essentially no growth. And then from 2022 to 2025 today, the revenue has just doubled over a few years. Doubled. And as the revenue has gone up, they have also become more profitable. Operating margins are now north of 40%. These GLP-1s are very expensive drugs, very high margin, and pretty much the entire growth that we're seeing in the fundamentals of this company over the past few years, that's due to Mounjaro and Zepbound. And those two brand names are essentially the same drug. They're both tirzepatide. It's just that one is prescribed for diabetes, the other is just for obesity. Now let's talk about some of the numbers. Their revenue is up massively, 38% growth on the top line, and they are gaining market share. Lilly US incretin analogs, whenever you read incretin analogs, just think GLP-1s. Their share of the market here has increased to 57% of prescriptions. So they're taking market share from Novo Nordisk. They're eating Ozempic and Wegovy's lunch here, and at the same time, the market is growing rapidly. 41% growth in the market year over year. And on the bottom line, earnings per share up about 60%, so massively profitable. They're taking that money, they're returning some of it to shareholders, about $2 billion total returned to shareholders in this quarter, and some of that money is going into R&D, of course. Pharma companies are always investing back into their pipeline. Eli Lilly has a relatively large pipeline of drugs. They highlight a few significant updates to their drug arsenal here. Kisunla, if that's how you say it, is their brand name for donanemab, which is an Alzheimer's drug that was approved last year. They're in the middle of other trials with this drug, so they hope that this will become a multi-billion-dollar drug as well. Obviously, the addressable population with Alzheimer's is very large. I will say, after looking at the trial results, I have a lot of concerns about this drug. I'm not a doctor, but my read of the data is that it has not been shown to be super effective, and the rate of severe side effects is extremely high. A lot of people have brain swelling and hemorrhages on this drug, so I'm not sure about the future here. The drug that many people are excited about with this company is orforglipron, which is an oral GLP-1. Right now, whether you're on Ozempic or Wegovy, Mounjaro, Zepbound, whatever it is, if you're taking a GLP-1, it's an injectable. You have to put a needle in your body pretty regularly, and for a lot of people, that is definitely a roadblock. That's a hurdle to jump over. Most people would just prefer to take a pill. So, right now they're running trials on people with diabetes, people who are just obese, people who are obese and have diabetes. They have a whole series of trials they're running on this drug. These are the Attain 1, 2, 3, all these Attain trials. That's for their oral GLP-1. The prospect of an oral GLP-1 is one of the reasons why a lot of analysts are more positive about the future of Lilly than they are about Novo Nordisk, at least for the future of their top line and bottom line growth. For the stock depends on, the valuation. Right now, you're paying a lot more for Eli Lilly than you are for Novo Nordisk stock. Just looking at simple trailing 12 months price to earnings, Novo Nordisk trading for less than 15, Eli Lilly trading for 47. Now, if we look at forward PE, which is probably a better measure for a company like Eli Lilly that's been growing a lot recently. You're talking about a PE ratio in the low 30s. So whichever way you slice it, it's a lot more expensive than Novo Nordisk, but there's a reason. Even forgetting the future potential of a pill version of tirzepatide, Lilly has just been taking over market share from Novo Nordisk. Their drug is also more effective. Tirzepatide has shown better efficacy than Novo Nordisk semaglutide in a lot of trials. So even though Novo Nordisk was first to market, their drug Wegovy was out before Lilly's Zepbound came out. Lilly is taking over here. Many doctors just consider Zepbound to be objectively better. They're more likely to prescribe it. And as far as which drugs actually get used by patients, it's not just about what doctors think are better, it's also about what insurance will cover. And until recently, Novo Nordisk, their drug Wegovy, did have some preferential treatment. Caremark, which is CVS's Pharmacy Benefits Manager, or PBM, they had a much more favorable treatment towards Wegovy, but it looks like that is changing. So I think this trend will only continue, and if an oral GLP-1 comes out, I think it's going to be very hard for Novo Nordisk to compete. Again, I'm not a doctor, but Novo Nordisk is working on an oral version of semaglutide, their GLP-1. But semaglutide is a much larger molecule than tirzepatide. The absorption is different, and even if they have good efficacy, it will have to be consumed in the morning on an empty stomach. So I think there's just good reason to believe that Lilly is going to be the winner here. The results they've released so far for the Attain trials, again, this is for the oral tirzepatide. Attain 1 was looking at just people with obesity, not necessarily diabetes, and the weight loss was significant and dose dependent. Higher dose meant higher weight loss. They had similar results in their other trials, which were on different populations, so just a group of people with diabetes, and in that group, it also lowered HbA1c, which if you ever had your blood work done, you're probably familiar with that number. It measures blood sugar control, shows whether you're pre-diabetic or diabetic. So the drug is effective. There are a decent number of side effects. Some people in the trial had to stop taking it because the side effects were so bad. But I think all these numbers, they're roughly in line with GLP-1 drugs now. So the FDA and probably most doctors are going to consider this to be acceptable safety data. Now, it seems the market was maybe expecting even better results from this trial here, because when they released the results of this trial, the stock was down, 14%. It has bounced back a bit, and there are a bunch of reasons why stocks sell off. Who knows? Maybe a major shareholder sold out of their position. I'm not sure. I think the trial results were pretty reasonable. Now, before we get to our sheet and see what we could expect for a return on our investment, let's just talk about the patents on these drugs. They don't have information on patents in this presentation here, but on their main drug, tirzepatide, they have a patent on the molecule itself until 2036, but they also have patents on how they form the molecule, their method of delivery. So they likely won't have any direct competition till, maybe more like 2039. We're talking 13 to 14 years of exclusivity there, I think. They do have some drugs where the patents are expiring within a few years. So Trulicity, which is for diabetes, the patent for that expires in 2 years. But overall on the patent front, especially when we consider where their revenue is coming from, I think they're in a slightly better position than Novo Nordisk. Again, you can check out the Novo Nordisk video on my channel to get more detail there. Now, I want to talk for a moment about pricing risk, because I think this is a significant risk for the stock. They've increased their guidance. This was an amazing quarter. They were making a ton of money. They're now guiding for $21 or $22 in earnings per share. But, a lot of that is because they charge a ridiculous price for tirzepatide. In the US, Mounjaro, Zepbound, these drugs are costing people over $1,000 a month. That is just a massive price tag. And elsewhere in the world, the same drug is maybe costing people $300-ish a month. So the difference between US and rest of world is huge. Many of you may have heard that Trump wants to massively reduce the price of these drugs. He wants the price paid in the US to be more in line with the rest of the world. So we'll see what happens here. No one knows for certain where that's going to end up. Some have argued that it might just increase prices on the rest of the world so that they come more in line with the US. I'm not sure. I have my doubts about whether pricing in the US will ever be in line with the rest of the world. But, if it were the case, if something like this actually went through and pricing in the US were the same as the rest of the world, it is simply not possible for Eli Lilly to increase prices on the rest of the world to a significant enough extent to compensate for the amount that we pay in the US. If it were the case that Eli Lilly has to adopt some most favored nation policy where prices in the US have to be similar to maybe other OECD countries, then that would be a big negative for Eli Lilly. Whichever way you slice it, the average price across their patients would come down, their margins would come down in that scenario. Now, let's get back to our sheet and let's see what we can expect for a return on our investment in Eli Lilly stock today. And now that we've gone through the business, a lot of this is going to come down to the assumptions that we make. What do you think revenue growth is going to be like in the future? The GLP-1 market has grown a lot. Do you think it's going to keep growing? Do you think it's going to grow at the same rate? I mean, keep in mind, Eli Lilly without GLP-1s, roughly flat on the top line over 15 years. When we buy Eli Lilly stock, we are making a bet about the future of this market, of GLP-1s. We also have to think about their margins. Are their margins going to stay as high as they are right now? Over 40% operating margins is quite large for a pharmaceutical company. So as far as what I think are reasonable assumptions, I'm giving them 15% revenue growth for 5 years. I'm basically assuming they're going to be able to double their top line over 5 years. And what this is really assuming about the segments of the company is that, the business that is not GLP-1s for Lilly, it's going to be basically flat. And the GLP-1 business, that's going to roughly triple over 5 years. I think those might be reasonable assumptions. I've shown this chart before in my Novo Nordisk video, but obesity is likely going up in the future. People also seem to be more open to take drugs like Zepbound, and I'm not exactly sure how to model in a potential oral tirzepatide drug in the future. As far as margins, I have them pulling back a bit to 35%. I don't know what's going to happen to pricing. I think there's going to be a decent amount of regulatory pressure here, so reducing the margin kind of reflects my belief that they might have to compromise a little bit on pricing. Free cash flow margin, I'm keeping about where it has been historically. Right now, they have a ton of CapEx, but they're still returning capital to shareholders, and I think this is probably fair. Now, as far as a multiple, this is a market leader. Yes, the market is growing. A 30 times multiple is a little bit rich. Some of the reasons pharma companies rarely trade for high multiples is, they're under regulatory pressure. They have a limited window to make money on their drugs. Their patents will expire. They always have to reinvest a ton of capital into R&D to keep that pipeline flowing. So it's a pretty capital intensive business. They also have risk of litigation, people suing them over some drug. Yes, they are trading for a multiple in the 30s right now. They even have been more expensive in the past. I mean, the stock is down. It used to be almost $1,000 stock here. Still, I can't give them a multiple higher than 30. And if these assumptions come true, you're looking at an 11% annualized return over 5 years, which would be a decent return. They could outperform this if oral tirzepatide turns out to be a huge hit, but there also is downside risk here too. If they're forced to lower prices for some reason, that could be an enormous hit to margins. I mean, just to see what we'd be looking at, if we give them still 15% every year growth on the top line, if margins just come down to 30% with a 12% free cash flow margin, and we give them, a 25 times multiple, now you're just looking at a 3% annualized return on Eli Lilly stock. And this isn't really a super pessimistic case. I still gave them a 25 times multiple and assumed that the top line was going to double over 5 years. Just giving them a 20 times multiple would make us down on our money over 5 years. And I haven't even touched our growth assumptions here. Now, as far as the bull case, if growth remains very strong, I'll give them 20% revenue growth on the top line every year for 5 years, and I'll keep the margins very high, 40% margins. Then now, if I give them a 35 times multiple, you're looking at a 23% annualized return on Eli Lilly stock. So overall, I think Eli Lilly stock looks okay. I think they certainly deserve to trade at a premium to Novo Nordisk. I just don't think the reward is high enough. I don't think the return in my base case is enough for me to be interested in this stock. Sure, it might be a great investment. If the bull case comes true, it would be incredible to invest in Eli Lilly stock today. But as far as what I'm doing, I am doing nothing here. I don't own this stock. At the right price, I certainly would take a bet. But, it's just not at that price today. I think I'm finding better opportunities in the market. For example, a lot of you probably know I like the health insurance companies. I own Elevance, UNH. I think the risk reward there looks better. And if you got value out of the video, again, subscribe to the channel. If you agree or disagree with anything I said, leave that down in the comments below. And I hope to see you all in another video.